Alright, welcome back everybody, it's Julian Crypto, and today's crypto news are Fed interest rates and what these people are talking about it, what is going on with mining industry, and Vaneck predictions on 2023. Also, Michael Saylor is comparing Ethereum to Terra Luna, and the biggest wallets right now are buying Bitcoin, accumulating, and Japan. This news we will talk today about. And remember, nothing here is financial advice. So let's start from the Federal Reserve. It raised interest rates by 0.5 percentage points on Wednesday. And the midpoint target right now for interest rates in 2023 is above 5%. In 2024, somewhere between 4 and 5%, and 2025, somewhere between 3%. Sigel. The Wharton professor Jeremy Sigel says you can be sure that the next year they are going to be talking about lowering rates in 2023. And Sigel said that the Fed is contradicting itself as it focused on crushing wages that are spiking due to supply side issues. This is the video.
There may be a structural shift of a reduction in labor supply. Well, what does economics say? If there's something that is a reduction in supply, you've got to let its price rise. I mean, that's economics 101. You can't suppress structural shifts. The Fed is not supposed to.
All right, and this is the quote. What is going on next? Bill Ackman, net worth more than $3.5 billion, is saying that Fed won't meet inflation goal without deep job-destroying recession. The Federal Reserve 2% inflation target is no longer credible. The globalization, the transition to alternative energy, the need to pay workers more, lower risk, shorter supply chains are all inflationary. The Fed cannot change its target now, but will likely to do so in the future. And what is going on with mining industry? So Bitcoin miner Core Scientific receives 72 million offer from Creditor to avoid bankruptcy. One of Core Scientific's largest lender has offered to loan this $72 million to potentially avoid unnecessary value-destructive bankruptcy proceeding. Miners had to sell, and they are selling also in the bull markets and bear markets previously, and we are still waiting for capitulation from the miner industry. And what are the predictions from Vaneck? Matthew Sigel, head of digital assets research, is investment giant Vaneck, with $68 billion in assets under management, has predicted this 11 points. So I will read you. Bitcoin will test 10 to 12k in quarter 1 amid a wave of miner bankruptcies, which will mark the low point of the crypto winter. Second, in the second half of 2023, Bitcoin will rise to 30k. Lower inflation, easing energy concerns, as possible truce in Ukraine, and turnaround in M2 supply will power the start of new bull market. Financial institutions will tokenize more than 10 billion in off-chain assets. Brazil will emerge as one of the most crypto-friendly countries of the world and tokenize a portion of souvenir debt offering on blockchain. Twitter will bolster its payments offering with state money licenses, competing more directly with Venmo and Cash App. A nation, most likely one dependent on oil exports, will announce it is adding Bitcoin and other digital assets to its sovereign wealth fund. A new decentralized stablecoin will reach 1 billion in market capitalization. Ripple will lose the SEC lawsuit. Gary Gensler will leave SEC and proposed legislation fails to gain wide support. Total Web3 monthly gamers will rise from 2 million to 20 million as multiple AAA games come to market, and the last, Ethereum will enable withdrawals from the Bitcoin chain. So these are the predictions. Right now, Tether, for example, market capitalization is over $66 billion and USDC $45 billion. Binance USD $18 billion right now, and they are predicting a new decentralized stablecoin will reach only $1 billion in a market cap, only in my opinion. Next prediction about the Bitcoin price, going in Q1 2023 to $10,000 to $12,000 for BTC, and then going up to around $30,000 in the second half of 2023. This is the prediction. And the last one, they talk about the Ethereum, and Ethereum will enable withdrawals from the Bitcoin chain. And Michael Saylor right here is comparing Ethereum to Terra Luna. So Bitcoin is engineered to be stable, robust, and increasingly secure and efficient over time based on proof of work and ASIC technology advances. Proof of stake protocols are inherently unstable, inefficient, opaque, and risky due to their fragile design. And this is the video he is talking about, and I will show it to you right now.
Capital staked on ETH can be withdrawn at a moment's notice once they enable those withdrawals. That makes ETH inherently unstable, just like Terra Luna or FTT, which was the air token from Sam Bankman-Fried's FTX. By contrast, capital moved into Bitcoin mining. ASICs can only do one thing, which is to mine Bitcoin. Now, technically, I know this is going to come in the comments, technically you could also mine Bcash or BSV or any other SHA-256 coin, but these are cryptos that continue to lose value against Bitcoin, and they now have very tiny market caps compared to Bitcoin. They basically lost the hard fork wars. And so the only practical thing to do with these ASICs, obviously there'll always be a very, very small percentage that's mining Bcash or BSV, at least until those two coins really completely die. But the majority of this hashing power and the majority of these ASICs are only going to be mining Bitcoin. If 2022 has taught us anything, it's that poorly engineered crypto protocols can blow up on a moment's notice in spectacular fashion. And I believe, as I've said, that any crypto that runs on proof of stake is subject to these same bank run dynamics. You can't have the same sort of bank run when you're talking about ASICs, because these ASICs are never destroyed. Maybe some are destroyed by an act of God. There's a flood, there's a fire, there's a hurricane or something. But the majority of them, they stick around for the usable life. And then those profit margins get recycled at the parent company level into making more and more powerful ASICs. Now, crypto that runs on proof of stake is subject to bank run dynamics, and I do not think that this is something that can be prevented by fancy software code or rhetorical assurances by Vitalik. And I'll just ask you, why do you think that Ethereum has not yet enabled withdrawals? Do you really think they're going to enable them in March of 2023? I have a feeling this is going to be pushed out. Ethereum has made so many poor engineering choices that it is now unquestionably doomed as a protocol. It is going to end in the same way that Terra Luna ended, and it's going to be, I don't know if it's going to end with a whimper or a bang, but the problem is you cannot secure things with fancy software. Much better to secure them with what Michael Saylor calls a wall of encrypted energy. The only question about Ethereum is whether it blows up in March of 2023 or a bit later. And so I'd ask you, if you're an institutional investor, if you're a large high net worth investor who holds ETH, just imagine what it's going to feel like to be the next Three Arrows Capital, which obviously had a lot of Terra Luna on their balance sheet. If you're managing other people's money, have you decided which jurisdiction to flee to when Ethereum blows up in the same way that Suzu and Kyle Davies and Three Arrows Capital blew up? If you found this video helpful, be sure to hit that subscribe and like buttons.
All right, and this is the video. Also, in the end, we have to show you that the biggest wallets right now are accumulating BTC massively right now. And here, Japan ruling party approved a proposal that exempts companies issuing crypto from taxes on unrealized gains on cryptocurrencies. So for today, that's all, guys. See you tomorrow, and thank you. And also remember, analyze on-chain metrics. Analyze it on Max Data app. Cheers and bye-bye.